1st February 2023, the Finance Minister Nirmala Sitharaman will present the last full union budget before 2024 elections. India's most awaited financial event comes in the midst of global slowdown, inflation, liquidity tightening, geopolitical tensions and re-emergence of COVID-19. Will India look to fire up its manufacturing? Will India build a moat against global uncertainties? What will the budget have for the middle class? Watch the complete coverage of Budget 2023. Real-time analysis, expert takes all day on Moneycontrol. Log on to www.moneycontrol.com for more.
Hello and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends and most importantly your queries during the course of the show. So please keep commenting on our live feed and we'll have your queries addressed towards the latter part of the show. But before we kickstart, let's see what the global handover looks like. European markets close higher, extend their New Year rally as the World Economic Forum kicks off in the Davos. Stocks in the Asia-Pacific open largely lower while the SGX Nifty signals a mildly higher start for the Indian market. No cues from Wall Street as the US market remains shut on Monday on account of a holiday. Is it prudent to invest in Pvr or Inox ahead of merger? Morgan Stanley laps up shares of Tata Metaliks, and also in the spotlight today are NTPC and Siemens. All right, let's get going. We're joined by Nitin Sharma of Moneycontrol Pro to discuss what's going on in the media space right now. And of course, Pvr Inox impending merger definitely dominates the scenario. Hi Nitin, good morning and thanks for joining in. How exactly do you see the merger math working out for investors? Is it a prudent idea to be invested in either of the stocks right now?
Morning, Karunya. Yeah, it's been an interesting journey last couple of months for the Pvr Inox stocks. As we have seen in the second quarter that basically occupancy levels crashed because the viewers were not finding content enticing enough. There are a couple of things are in play. So first of all, the exhibition sector is finding it difficult to challenge the OTT. And as we are seeing that OTT's adoption via mobile as well as connected TV has become a proper headache for the industry. Now, despite success of few regional films, even all South-based films are not a hit with the customers and cinema goers. And there's definitely a shift why the question that why they should pay for a content that would eventually come to the OTT platform in next 6 to 8 weeks. Also, when you look at from the Pvr or Inox perspective, so on an average, a single ticket cost around, including the food cost around 350 to 400 rupees per person. So for a cinema goer of 2, the bill comes closer to 1,000 rupees. Now, when you look at it with OTT, a budget-conscious customer can easily have 4 to 5 OTT subscription for 3 months or more, or even have the cheapest Netflix subscription for the next 5 months. So they have a gamut of options. Content is very much differentiated on those platforms, and then raises a question that should they select a movie, spend $1,000 on a movie, or rather wait it out and watch it on the OTT platform. Also, when you look at it, the trend we have seen, the anecdotal trend we have seen is that unless the movie has been seeing a very good word of the mouth or social media driven suggestions that people are liking it and suggesting others to watch it, people are not going to watch the movie. So in case of the recent hit as Kantara or Drishyam, people did go to watch the movie, but not so for a movie like, for example, Vikram Vedha.
Yeah, I mean, I was reading this report from Kotak as well, wherein they've downgraded PVR from buy to an ad. They also said that, people's tolerance for mediocre content has really sort of gone down, and that's also why the footfalls have reduced. And of course, the pocket-friendly consumer will wait for the OTT release and then watch the same film a couple of weeks later compared to cinema goers. But let's talk about the valuation scenario, the synergy benefits, if at all. Do you see anything for PVR Inox? What do you think on those parameters?
Right. So one thing that needs to be understood is that post merger, PVR Inox is going to be the biggest chain in this space, and they would easily be able to leverage and attract moviegoers. So for a exhibition sector company, box office sales is not the only source of revenue. They do the advertisements as well as the food and beverage sales. From there, their revenue comes. So when you look at the combined company of PVR Inox, they will combinedly have more than 1,600 screens and 110 to 120 cities across India. Also, PVR, for them, this year's target of 125 plus screen launches. Many of those screens have already been have begun operation. So this flow is going to non-metro cities, tier 1, tier 2 cities, which has not saturated. OTT adoption is still a question, and people would want to have an option to go out on the weekends, and this could do the trick for them. So when you look at it, the PVR Inox is a combined company. I think they are not going to cease to exist. Yes, they are going to a rough patch, and this does not mean that it's going to be a long-term challenge for them. Let me explain why. Because when you look at historically, pre-COVID, the multiplex sector has 32% kind of occupancy throughout. And pre-second quarter, the occupancy touched, I think, 31 to 32%. In second quarter, it fell to 24%. In our estimate, we also believe that third quarter is going to be soft. And we have been building a less than 30% occupancy for both third Q and fourth Q. But we also see that there is a content pipeline that is going to improve for Bollywood and Hollywood. Just to give you an example, if you look at in third quarter, there were only two movies that did more than 100 crore business. One was Avatar, which was a Hollywood movie, and then second was Drishyam with 240 crores. And when you look at regional cinema, then the Kantara did 310 crores and Ponniyin Selvan did around 260 crores. But other than that, all other movies across different region, language or markets failed to touch 100 crore mark.
Yeah.
So that is kind of a challenge for in the third quarter. But in fourth quarter, the recently released movies are seeing decent traction. Also, third quarter had lesser number of movie releases. I think Bollywood only released 22 movies and hardly 2-3 movies. Rest of them were less than 100 crore kind of a budget. So they are also playing with the recovery part, how much they can recover. Accordingly, they are allocating the cost. Fourth quarter would have a very big movie, which includes Pathan and couple of Hollywood movies that should drive revenue for the exhibition sector, because bigger star movies tend to attract a decent number of crowd, at least for the openings. Having said that, we see that for FY24, EV to EBITDA of 7.5 for PVR is not expensive. And while OTT challenge remain in the short term, but nonetheless, it's an attractive buy at this level for the investors.
All right, Nitin, thank you so much for helping us understand what's happening in the media and entertainment landscape, and with specific focus on PVR and Inox, what lies ahead for both of these companies in terms of expansion plans pre and post the merger. All right. Let's also bring on board our technical guest for the day. Nilesh Jain is here with us from Centrum. Morning, Nilesh, and thanks for joining in. US markets were shut yesterday, but what are the early cues we're picking up from Asia? What is SGX telling us, and how is Nifty likely to play out today?
Very good morning to Karunya. Well, if you look at the global market, we are getting mixed cues, and we are also not expecting any major fireworks in the Indian equity market as well. See what is happening in last couple of days. The Nifty index has gone into some sort of a consolidation, and it is consolidating in a very tight range of 17,750 to 18,200. And there are multiple hurdles on the high side. The immediate hurdle, which is placed at 18,070, which is again a 21-day moving average, followed by 50-day moving average of 18,300. So what we believe is that going forward, we are expecting some sort of a consolidation that is likely to continue in the range of 17,850 to 18,250. So that's the precisely trading range of 300 to 400 points for the Nifty index with the buy and decline approach. So long position should be kept intact till the time Nifty doesn't reach below 17,750. On the other hand, if you look at the Bank Nifty structure where we are getting some sort of a again, similar sort of consolidation is, seems likely in the Bank Nifty index as well. The only positive point from the banking space is that it is sustaining well above 42,000 psychological support mark. And as long as it trades above 42,000, we are likely to see a pullback rally towards 42,500 to 42,800. So the outlook for the Bank Nifty looks slightly positive compared to the Nifty index. And looking at the PSU banking sector chart, we believe that PSU banking should outperform. Specifically counters like SBI, Canara Bank and BOB, these are the counters where we are having bullish stance. Lastly, the volatility index, although we saw some sort of a spike yesterday of 4%, and still it is looking very much in the comfort zone of 15. So 16 is the resistance for the IVs, and on the lower side 13 is the support. So that's precisely range of 13 to 16 for the IVs. As long as it trades below 16, we are likely to see the bulls are likely to have some sort of upper hand in the market.
Okay, all right. Let's talk about some stocks as well, which are likely to be in the spotlight today on back of news flow. The first name is Siemens. Now, they've bagged an order for 1,200 locomotives of 9,000 horsepower from the Indian Railways. The deliveries have been planned over the next 11 years. The contract value is 26,000 crores. So, a big contract winning coming in from Indian Railways for Siemens. Talk to us about the stock chart. Last couple of weeks, good up move, good momentum seen, about 150, 170 rupees added on the upside. But again, this week or the last couple of days have been a bit lackluster again. So what kind of a trajectory do you foresee from here on?
Well, Karunya, if you look at the broader structure, the counter has been in an uptrend and in a secular uptrend, I would say, from on the monthly time frame. But no doubt, in last couple of weeks, we have seen some sort of consolidation, and that is a good consolidation that what we are witnessing. It's a good buying opportunity going forward. If at all it breaches the 3,050 mark on the high side, then probably it is likely to move towards 3,200 to 3,300. So outlook continues to remain on a positive side with a buy on decline approach. Keep a stop loss below 2,800, and any dip should be could be a good buying opportunity. On the high side, from a position perspective, we are expecting an up move towards 3,200 to 3,300 from next 3 to 4 months point of view.
Okay, all right. The next stock on our list is NTPC. The government of Tripura has signed an MOU for developing some large-size renewable energy projects in Tripura with the NTPC subsidiary, which is called NTPC Renewable Energy. Now, NTPC has cooled off a tad from its 52-week high, but it still is sort of stable above 160 rupees levels. Is now a good time to buy, or should one wait for further correction?
Well, you have rightly pointed out the crucial support of 160, which is very much intact. And looking at the overall structure, there could be possibility of some sort of a consolidation. But yes, it's in a buying territory, and it can be bought at current level and on decline. On the higher side, the breakout is also awaited from a symmetrical triangle formation, where the falling trend line resistance comes around 171. So 171 is the immediate hurdle. Any breakout above that will open upside towards 180 to 185, or maybe it will likely it may test the new all-time high levels going forward. So the outlook continues to remain on a positive side, but one may have a time horizon of let's say 6 to 8 months.
Okay. And the third name on our list, again from the mid-cap space, is Tata Metaliks. Now, Morgan Stanley Asia has bought close to 2 lakh shares in the company at an average price of 834.7 rupees a piece. Tata Metaliks also, from its December lows, has seen a very strong rebound. most likely it will augur well that a big name like Morgan Stanley has lapped up shares. But going purely by technicals, what's your view here?
Well, usually we don't see that kind of volume activity, but in last two trading sessions, we have seen good spike in the volumes, as well as we have seen some momentum in the price action as well. So looking at the overall chart pattern, we may see further momentum on the high side to continue towards 900 to 950 in a very short term. So keep a stop loss below 800. Long position can remain on one can remain on the long side with a stop loss below 800 for the upside target of 900 to 950 in the short term.
Okay, all right. Okay, then we also have a lot of queries and questions coming in, so let's get to that. Pooja is asking us about Maruti Suzuki. She bought 100 shares of the company at 8,420 levels and wants to know how things could play out from here on.
So Maruti is basically hovering near its 200-day moving average as well as 21-day moving average, which is placed near about 8,400. And in last 2 to 3 weeks, we have seen some sort of consolidation in a very tight range of 8,000 to 8,500. So from a positional standpoint, yes, Maruti looks attractive, but one should have a time horizon of little longer term, let's say 12 to 16 months. In a very near term, we are likely to see further continuation of this particular consolidation. Stop loss should be placed below 8,000 from a trading point of view, and upside it may extend towards 8,600 to 8,800.
All right, okay. Satya wants to know about Devyani International. They bought 175 rupees was the buying price for Devyani. Asking if now is a good time to average, or perhaps if there's another level that they should watch out for and then add more shares of Devyani. Now, Devyani has last 1 month consistently sort of been falling, and looks like the pain could continue. What do you think, Nilesh?
You're absolutely right. Third consecutive month, we are witnessing a downfall. And in this particular month, so far, it has fallen by 13%. The trend looks slightly on a weaker side. It has slipped below all the short-term and long-term moving averages. So on the lower side, the major support now comes around 140, which is slightly, almost 18 points from the current market price. So I would suggest to wait for any sort of averaging out. I would rather say avoid averaging out in this particular counter. Keep a stop loss to your existing long position below 140. And any pullback towards 180, 185 could be a good opportunity to exit from the long position. We may not see that kind of up move in this particular counter. In last 1 year, this counter has consolidated in a very tight range of 210 to 140. So it is better to exit on a pullback.
Okay, all right. Moving on to Raja Muthu's query, wants to know about Samvardhana Motherson Sumi. Talk to us about this one. Again, good uptick seen last couple of weeks. Can the momentum sustain?
Well, if you look at the Motherson Sumi chart, which is currently trading around 75 rupees, and it is trading below its 200-day moving average, which is acting as a major barrier. And on multiple occasions, it has tested those levels, which is placed around 79 to 80 zone. So as long as it trades below 79, 80, the pressure would be there on the high side. So it is. I would rather suggest to shift to the other names from the auto pack like Hero MotoCorp or maybe Mahindra and Mahindra. And this particular counter, I'm not expecting any major fireworks going forward. But yes, there could be possibility of a gradual up move. So if somebody has a time horizon of 12 to 18 months, then one can stay put in this particular counter. Keep a stop loss below 66. And on the higher side, watch out for a breakout which is placed at 80. Post breakout, we may see a sharp up move towards 85 to 90.
All right. Okay. What about Jubilant Food? Praveen Prakash wants to know your observations of the chart here.
Well, another underperformer in line with the Devyani International that we spoke about. So in last 2 to 3 months, we have seen a lot of consolidation with negative bias. It is trading well below all the short-term and long-term moving averages. The only support that I could see on the chart is placed at 450. So one should keep a stop loss below 450, which seems very likely that it is likely to test those levels going forward. So if somebody is interested in buying fresh positions, so better to avoid. And the outlook looks slightly weaker in the very short term.
Okay. Let's talk about IT giants as well. A lot of interest there still, even after a week has gone by since they delivered numbers. Adi is asking about HCL Technologies. Mukesh Patel wants to know about Wipro. I think I saw some comments on Infi as well. So if you could tell us how the three big names stack up.
Right. Well, if we talk about the numbers, which were somewhere in line with the estimate, and a lot of pessimism we have seen in last calendar year 2022. Now we see a sort of a pullback in this overall IT pack. The risk and reward definitely looks favorable for a pullback to continue. If you look at the momentum indicators and oscillators, which has gone into extremely oversold territory. So at current level, there is no point going short. In fact, one can play contra bet on the long side positionally as well as from trading point of view. If you look at the chart of HCL Tech post numbers, we have seen a sharp up move in this particular counter, which seems very likely to continue towards 1150 to 1200 going forward. Apart from that, Wipro, similar sort of formation can be seen, a bullish engulfing on a daily time frame chart. Looks positive for a pullback to continue towards 405 to 410. Lastly, Infosys, it's in our buy recommendation list as well, and this particular counter is looking very positive for the upside to continue towards 1600 to 1650 from relative positional perspective.
Okay, fair enough. Manish is sending us a comment and wants to know your view on HFCL. This one also, last 1 month has given up about 7-8%. We did see some respite coming by or some recovery coming by, from December lows. But still, on a monthly chart, if we look at it, it's still pretty much in the red.
So, Karunya, you are talking about HFCL, which is trading at 73.
Yeah.
So this particular counter, you have rightly mentioned, we have seen some sort of a pullback after testing the lows in the December month of 65. So this pullback may extend towards 75 to 80, but I'm not expecting any major up move on immediate basis. There could be possibility of a gradual up move towards 85, 90 or maybe 100 sort of levels. But for that, one needs to wait and give some time. On immediate basis, from a trading point of view, the range comes around 65 to 80 on an immediate basis. The stop loss on immediate basis should be placed below 70.
Okay. How about Delta Corp? We have a comment coming in from Virat and they want to know about Delta. It's seen a good, interesting trajectory last 4-5 months. It has had its fair shares of highs and lows. But now that, if we look at the recent recovery from December low, how do you see things playing out?
Looks very attractive on the long side. In fact, this particular counter was also on my radar. And I believe it can be bought at current level for a pullback towards 230 to 240. The technical setup looks positive. We have seen a double bottom sort of formation, and that was seen near about 190 levels. So at current level, one can buy with keeping stop loss below 205 for the upside, which may continue towards 230 to 240.
Okay. We have a query coming in from Arvind Kumar. He says Hindustan Copper उन्होंने खरीदा है for 126 rupees a piece. Nilesh, if you could tell us preferably in Hindi how things are likely to play out for Hindustan Copper. 126 रुपए में लिया है and they've not made any money yet. So क्या उनको उसमें invested रहना चाहिए?
बिल्कुल करूँगा। देखिए निफ्टी मेटल इंडेक्स हमको काफी अच्छा लग रहा है, जिस हिसाब से डॉलर इंडेक्स में हमने गिरावट देखी और ग्लोबल मार्केट में देखें तो कमोडिटी प्राइसेस शूट अप हो रहे हैं, कॉपर के प्राइसेस शूट अप हो रहे हैं, तो इन सबका बेनिफिट कहीं ना कहीं निफ्टी इंडियन इक्विटी मार्केट में जो मेटल से जुड़ी हुई कंपनी उनको आता हुआ देखने को मिलेगा। तो हिंद कॉपर इस पर्टिकुलर काउंटर की बात करें तो रिसेंटली हमने एक ब्रेकआउट देखा 120 लेवल्स पे और आउटलुक पॉजिटिव लगता है। यहाँ पे बने रहने की सलाह होगी। ऊपरी स्तरों पर 145 से 150 तक के लेवल्स नेक्स्ट 1 से 2 महीने में देखने को मिल सकते हैं, तो एक अच्छी कंपनी है, बने रहे।
Okay, great. Thanks for that. Nilesh, the next query is on Power Grid from Vinod Kumar, and interestingly, Power Grid has not been able to catch up with many of its PSU peers who've seen a phenomenal dream run last few months. Do you think while it might be a late bloomer, it will finally break out, or is it an avoid?
No, I think yes, going forward, we may see Power Grid patching up the rally that we have seen in this particular space. In fact, what is happening in this particular counter is that it is stuck in the range of 195 to 240. 240 is the highs that it has made in the month of May 2022. I think going forward, these high may get tested, but looking at the texture of this particular counter, which is slightly slow mover, so I believe in the calendar year 2023, we may see the targets of 240 to 250 going forward. So one can stay put, and also one can initiate a fresh long position with a stop loss below 195.
Okay, all right. Last and final query, Kaushik is asking us about Titan. They entered the counter at 2641 and asking what to do now. You know, last couple of months, the stock has been trading in that range of 2400 to 2600 odd. Do you see it breaking out of that? Should one use 2400 as an opportunity to average, or do you foresee further correction which could offer a better opportunity?
I think this counter has topped out, and it has also broken its immediate and crucial support of 2460. Now, for any pullback to continue, it needs to reclaim the levels of 2460 on the higher side. And the structure looks slightly on a negative side on immediate basis. So far in this particular month, we have seen a correction of 7%, and it may extend further towards 2350 to 2300. So it is better to wait for some more correction to span out, and post then near about 2300. There could be an opportunity to make a fresh entry on the long side.
Okay. You know, I have one more query coming in. This is on PNC Infra Tech, and I know, Nilesh, that one of your picks is also an infra company. So why don't you talk to us about both of them and your preferred pick for the day?
Right. See, PNC Infra slightly lower in terms of volumes, and if you look at the overall structure, that is looking very promising. A big rounding bottom is shaping up on a weekly time frame chart, and the structure hints that it is heading towards 380 mark. So I would suggest stay put in this particular counter. Can be bought on declines. Keep a stop loss below 300. The upside is very much open for 380. Overall, we are very much bullish on infra space. We are liking L&T, we are liking PNC Infra, and also the counter that we are liking from a trading perspective is IRP Infra. Similar sort of formation can be seen in this particular counter as well. And yesterday, it has given a big breakout on the daily time frame chart from a falling channel pattern, and it is heading towards 320 on immediate basis. So that should be the target. And stop loss should be placed below 300. So that's a long side bet from my side from this particular space. From IT pack, as I was talking about Nifty IT index, which is looking positive for a pullback to continue. So Infosys looks very strong. Numbers have already come, and now it is forming some sort of a base near about 1450 to 1500 zone. One can go long for the upside target of 1570, keeping stop loss below 1495.
Okay, great. Thank you so much, Nilesh, for talking to us about a host of stocks and even the benchmarks at large, and sharing your thoughts with us. Okay, just about a fortnight to go for the union budget, and we will get you the most comprehensive coverage from the biggest market voices to the brightest minds of India, and catch all the analysis right here on Money Control. But for now, I will be taking your leave. Thank you for watching.
1st February 2023, the Finance Minister Nirmala Sitharaman will present the last full union budget before 2024 elections. India's most awaited financial event comes in the midst of global slowdown, inflation, liquidity tightening, geopolitical tensions, and re-emergence of COVID-19. Will India look to fire up its manufacturing? Will India build a moat against global uncertainties? What will the budget have for the middle class? Watch the complete coverage of Budget 2023. Real-time analysis, expert takes all day on Money Control. Log on to www.moneycontrol.com for more.